Hello and welcome to the 3 keys to collecting money banks are taking from you. So this is the starting process. We're going to explain exactly what you're going to be going through with the training and the terms in order to be able to do the processes within Woje. So what we want to do is we want to start off by letting you know exactly what you'll be accomplishing from this. In following Woje and following the Woje principles and using the system correctly, you're going to be able to accomplish quite a bit. The biggest thing is you're going to be able to capture massive wealth back that was going to Visa, MasterCard, Discover, was going to, merchant services and collections. What's unique about those 3 things, and we're going to go into a little bit later. Next thing is quicker income growth while limiting taxes. As you grow your business and you follow the system within Woje, you're going to be able to capture those funds back and at the same time be able to keep them from being taxed. And we explain the whole process to you. You're going to see how simple it is, and hopefully it ends up benefiting you as well as it has a lot of the other companies that have done it, including myself. Next is larger sales, larger customer base. Anytime you can sell something on finance, and remember, if you're a little bit nervous about financing or you don't want to finance, that's okay. We're going to explain the benefits of financing even when you don't want to finance, and you'll see how beneficial it is. But really, it does create larger sales. The explanation that I usually give is if I had a Bugatti to sell and I was selling it for $4 million and people were trying to buy it, but they couldn't get a loan in order to purchase it. They had to purchase it cash. The amount of people that are limited to buying it are very few. But if I was to take that same vehicle and say, well, you know what, we're going to do it at $50,000 a month, how many more people would be able to accomplish being able to pay for that car? What if I was to say it's $200 a month for the rest of your life? Pretty much. At that point, even a high school kid could end up purchasing it. So it does create a much larger purchasing customer base by doing this. And it also creates larger sales because people can afford to have whatever product or service you have at a greater price. It also reduces the amount of discounting that you do. Next, long life customer base. When you finance someone, they're your customer. They're your customer for a long time. And usually if you have a product or service that they're going to need again sometime, then they're going to come to you first because you're the ones that has been financing them in an ethical, honest, and transparent way. So let's go on. What will you be learning during this process? You're going to be learning how to keep all of your profits. You're also going to be learning how you can safely finance your customers. That's the main thing is safely finance your customers. And there are ways to keep it safe. We actually have a psychologist on our team that will be explaining the fear and greed side of financing and what causes collections, which is really, really cool. Next, how you can keep the credit card interest, and that's through the process of financing. Next, how you can thwart collections. And it's interesting if you look at it, most people when they think of financing, they think, oh, I'm going to have to deal with more collections. Actually, through the process that Woje has, it actually cancels out collections and you don't have to send people to collections. You keep them, you make more money, but it's a huge benefit. Now, just really quick, I'll tell you a little bit about my journey. So I've owned companies for quite a long time, but I started out just small. I was talked into starting my own sign company by some mentors, and I jumped right in. Really didn't know what I was doing, but I did it anyway. And during that process, credit cards were just coming into fruition. So I'm kind of dating myself. I remember them saying that you had to purchase a terminal or lease a terminal because they were too expensive back then, and that this was the wave of the future, that everybody was going to be using credit cards. So I jumped on the bandwagon because I followed just like a sheep with everybody else. And so I started leasing a card swiping machine back then, which was running me about $250 a month. Nowadays, people look at that and say, that is nuts because, Square is dirt cheap. You can get a Square swiper for for nothing. But back then it was, it was brand new. So whenever it's brand new, it's usually more expensive. So I was leasing this machine, and my first client or customer was only about $45 about every month. They were ordering signs. So you can imagine I was going in the hole every month. So I didn't really like that. And I was like, why now am I having to pay in order to collect my money? Because there was not only that, but there was batching fees and, anywhere that they could nickel and dime you. And the same process is going on now, where, the goal is to nickel and dime the businesses, take a percentage of every profit, earn the interest on the backside. And I didn't like that very much. The other thing that was happening is I was in a churning bucket. I was discounting to make sales, and I'm sure a lot of you do the same thing. You're like, I'll do it for less. That process would hurt all of the small businesses, while the larger businesses were doing great. And I still remember it. It was a Mills Montessori school. I bid on their sign, and it was, I can't remember the exact numbers, but I think I came in at $8,000, $9,000 for their signs. And I got the bid because I was the lowest. And so I went to pick up the deposit check. And by the time I got there, they had signed a contract with a larger company. And I was like, there's no way that they could have beat my price. And they said, well, they were willing to finance. And when I saw the financing, I realized, oh my gosh, I could have financed. I thought, you know what, I'm going to try it. And the next job that came along, I would have bid it out at about $9,000 because I knew my frenemy, who I called my frenemy, would have bid it out at just above 9,000. So I knew that I'd get it. But I also knew that larger companies were bidding on it too, and they were probably going to finance it. So I wrote it up for $33,000, I think is what it was, financed. And I ended up getting it because the closest larger company to me bid it out at about $42,000. So I was so excited, and I got the deposit, started going, doing the work on the job. And I felt so guilty. I ended up building 2 extra signs for them. But at that point I learned the power of financing. So I started financing a lot of people. Then, of course, the problem hit, and that was collections. And I tried anything and everything to get people to pay, anything that was where I wouldn't lose the customer. And of course, it was a nightmare. And I lost a lot of money, but I knew I was on the right track. I knew that there was a way to be able to collect that money, eliminate the merchant fees, and be able to finance customers. And I kept looking and trying different things. And then I started combining a couple of ideas together. When I brought those ideas together and those systems together, all of a sudden it eliminated collections. I was able to finance, earn interest, and I was able to keep all of the transaction fees. And I was like, this is amazing. So I just started doing it. And this was about 22 years ago. And because of that, I was able to, and still am at 100% collection on the original balance of all the contracts that I've done. The amount of interest that I've earned for the interest that I put them at, I'm still at like the high 90s just because of this process of how to do it. And it's been very lucrative. And I spread from my sign company to other avenues, anything and everything that I could think of. So I've done it with furniture, equipment, training, software, trees, LED lighting, vehicles. Just anything that that came my way, I just started looking at and started financing. And it became really, really fun. And I realized that the huge benefit there is I was saving my customer money while I was earning more money. And I was doing it passively, and I was generating all this interest, and I'm still earning interest on jobs even today. And we'll continue doing more and more contracts, as the years go by. It's fun. It's just a lot of fun. And so the goal is for you to learn it, be able to do it, gain this experience, be able to earn that income for yourself and reap the benefits that I have and those people that use Woje. The main thing is you're going to have to do a major paradigm shift. And that paradigm shift deals with this. When you were born under contract, and most people don't realize this. You were born under contract, and that contract says you're going to be charged interest. And that interest is going to accrue your whole life, and you're going to pass that interest on to your children and your grandchildren. Where is this contract found? The contract is called money. It's currency, and it's controlled by the Federal Reserve. We do not actually own this money. The Federal Reserve is a private bank, and they own this money, and we rent it. And because we rent it, we have to pay interest on it. That's just how the game is played. So you have to understand this. This right here is a contract, and that contract earns interest for the Federal Reserve. Now, what's really interesting is when you go out and you do a sell, let's say that it's a $1,000 sell, and you take one item that's $200, you can take another item that's $200, and you mash them together. Now these two things cost you $400, and then you turn around and you sell it for $1,000. Well, all of a sudden you've created out of thin air $600 that you have to pay taxes on and pay interest on. But does the Federal Reserve actually go out and print it? No, what it is they own the name dollar. And because they own the name dollar, you are being charged interest on that name now. That's why we have electronic currency now, is because when dollar bills are done electronically, you pay interest on it, and the Federal Reserve doesn't even have to print money. So that's what's really, really kind of strange about this whole thing, how the system works. So what we're going to talk about is the three keys. And the first key is to copy how contract currency flows. So you're going to be creating your own currency, your own contract. So let's take a look at that. First off, you've got the Fed's corporate contract, which is the dollar bill. And of course, it's not just paper, it's also electronic. But for right now, we're going to look at just the contract side of it. It's privately owned, and so they control its quantity, they control its circulation, they control its interest rate. And then if you look at it according to state and federal government, they control how much you keep or how much you're renting. They control when you pay it. Now we're talking about taxes. They control the price to create it and use it. So in other words, if you want to create dollar bills, there's a price in doing it, and it's called taxation. Now let's look at the World Bank or those that deal with the exchange. They make off of every time a card is swiped, they take a portion of both sides of a transaction. They actually are involved in that exchange, and sometimes it'll deal with just one side, sometimes it deals with both. Even when it's bank to bank electronically, they can take a percentage. So a lot of people look at Venmo and they're like, oh, it's free. No, it's not free for them. They're just trying to build up their clientele to the point where you're used to using it. And because you're used to using it, when they do start charging, they'll probably start with businesses, and then they'll move on to consumers because you're already in the habit of doing it. Credit card companies. Now, credit card companies are kind of interesting because they create nothing, yet they're making money off of your work. They're making that percentage, that huge amount off of small businesses. And here's what's really interesting. I think, I can't remember if it was 2019, but I think the major credit card companies did $800 billion in income, 2019, 2020. But $800 billion off of small businesses. But here's what's interesting. It's not really 800 billion. You actually gave them several trillion dollars in assets called contracts. And those contracts are earning more money. It's a massive amount of money, and it's all done mainly by small businesses. That's why small businesses really are the driving force in America. So now let's move on to key number 2. Key number 2, you must have your own currency or contract. So we need to follow exactly what the Federal Reserve is doing, what the banks are doing, what the credit card companies are doing. We need to follow what they're doing in order to be able to capture all this money. So think about it. Would you rather win $1 million, or would you rather have $1 million contract or $1 million in contracts? Well, if you win $1 million, plan on the government taking about 40% of it. But here's the thing. If you have $1 million contract and only a portion of these contracts are exchanged into dollar bills, what are you taxed on? Now we're getting into accounting, but most small businesses do cash instead of accrual. Because of that, you only pay taxes on the cash that comes out of those contracts. And the contracts are earning money. Let's say that you're only pulling out of $1 million, that you're only, that the monthly payments coming in are $1,000 a month. Well, you're probably expensing that $1,000, and the $1 million, let's say that it's growing by $1,000 a month. That means that it will continue to churn and keep generating that interest, and at the same time you're expensing it out, but you're paying nothing in taxes. And that's how the rich do it. We need to have you follow these same principles so that you can reap the same benefit as well. So you must have your own currency. The current currency and transaction systems are to allow just enough money to remain local for you to be able to survive. And that deals with taxation and credit cards. Think about it. If they can pull it from your city, if they can pull that money from your city and make it so that there's just a little bit in there and you keep building and that money keeps flowing away, they just make a ton more money. And that's kind of the goal. If they just leave enough to keep you where you're at so that you'll keep feeding them, then that's like perfect for them. But if you switch the table on them and you start becoming the bank, you start becoming the credit card company, you start becoming the collection agency, and you use that as a tax haven, you end up stopping that happening, and all of a sudden the dam is building in your business and in your community. So you want to work just like they are on a small scale and reap the benefits that they are. So you dam up the exchange of currency becoming taxable. You are able to build wealth bigger and faster, and you are able to control its outgoing flow. It's absolutely amazing how much money flows out of communities from small businesses. Most of the time we don't think of that. It's kind of out of sight, out of mind. And the credit card companies and the lenders do not want you to see how much money they're making off of nothing. They don't make anything. They don't produce anything. The key is you've got to make it so that your contracts are functioning just like a currency. So it all is back down to your contracts. And here's what's really interesting. If you look at it, the Federal Reserve or the government, or however you want to do, if you look at it, you are actually establishing your own country. And because you're establishing your own country, which it could be you or the name of your business or whatever, you create these contracts, and those contracts are currency and they flow a specific way. With those contracts or your currency, you control its quantity, you control its circulation, you control its interest rates, the fluctuation of its interest rates, you control how much your customers have in your contracts. You also control the exchange to US currency so that you can control taxation, and you control its cost to produce it and use it. It's absolutely amazing how much money you can make off of it. So here's just an example of the growth that you can do. Now, if you look at the green, that's the regular way. The green and the blue is the regular way that businesses usually function, and that is cash in, cash out. Well, if you look at the green is the income that's coming in. So we just did it on a small scale for just like a solopreneur, a handyman or something that's really small. And if you look, the taxation expands as the currency expands. But notice what happens with the asset or the contract, what's remaining in the contract. And as you're building those contracts and it's earning interest, it expands at a much faster rate. And if you notice, it doesn't change the growth of the taxation. The reason why is because it's not sitting in a currency that the government sees as currency. It's your own currency. And until you exchange it, as long as you're doing cash basis, you're able to grow your wealth at a much faster rate. It's kind of like this. If you had $10 million, and let's say from that $10 million, you had $10,000 a month in passive income coming in. Let's say that you're expensing out in your business $10,000. It's covering your property, it's covering your cars and utilities and whatever. So you're expensing it out and you show that you're not making any money. Well, what if you were to go out and get another 10 million in contracts? Now you have $20,000 coming in a month, and that means that 10 of it is going to be taxed. Well, you have two options, and this is what the wealthy do. The first option is increase your expenses. your business expenses. You start using them for whatever you legitimately can. Sometimes, the wealthy use it for vacations or other things that they're able to do as tax write-offs. So they'll try and expense out as much as they can and still be able to have, use it as a way to have a more luxurious life. Now, at the same time, if you don't want to do that, you could go back to your contracts and say, you know what, I'm going to knock everybody's payments by 50% and knock it back down to $10,000 a month. Well, now you have $20 million. You just doubled your income, but yet you're still not paying anything in taxes. So it's kind of how the wealthy look at money. It's all a game of who owes who. So I know this is a lot of information. And I love this stuff because I really want you to understand it, and I want you to be able to move forward with it, because this is where wealth is really created. And if you notice, it's not, hey, learn real estate. It's not, hey, you can start learning how to market on television or sell stuff on Amazon. No, it's using what you already know how to do, using the business that you already understand to be able to become wealthy and financially free, using the same principles as the wealth. That's why, someone can become a multimillionaire off of sippy cups, and another person can become a multimillionaire off of building houses. It doesn't matter the vehicle, it's what you do with your money or your currency. So let's go on to the last thing, key 3. Now, what in the world would key 3 be? Well, that is Woje and the system behind Woje and what Woje can do for you. It's a system of being able to capture these funds back, doing it systematically and simply, transparently, civilly. It's using all the ethical points of banking, of credit cards, of finance, of collections, and creating this symbiotic relationship between you and your customer, and making it so that it's long lasting and you make more money. Oh, darn. So what does it deal with? Well, of course, the cancellation of those 3 things: merchant services, collections, and credit cards. And you being able to do this system as much as possible so that you can keep all the money in your own pocket. Now, again, credit cards are a necessary evil right now in business. Of course, things are moving to cryptocurrency, but at the same time, it'll be a long time before credit cards are done away with. Merchant services will probably still be a part of your business, but you can eliminate a lot of your merchant fees and be able to keep them yourself. And we're going to show you that process. In one of my companies, we do a lot of business, but the way we do business is if someone pulls out a credit card, we already know that they're in good standing with the credit card company. So we offer them in-house financing because we know our financing is much better than any credit card. And by doing that, we eliminate those fees, and we really don't have that many. We've been able to slowly train our customer base to where they know how we work, they know how we function, and we keep them forever, and we don't pay any of those fees. And that's what we're going to teach you how to do. Next thing is you're going to learn MLP. It's the personal margin. So this is training on exactly how to finance within your business. And remember, you need to do a paradigm shift. And that paradigm shift is financing is not just one specific way of doing it. Financing, when you become the bank or you become the credit card company, quote, you end up being able to control the financing. And when I say control the financing, you can do some amazing things with it. I've done things where I've started to finance contract out at $100 a month for the first year, and then had it increase to $250 a month. I have done things where the interest will lower as the payments come in on time. So there's some really, really cool things that you can do. You can do no interest for the first year. You mean just like a lot of people do. 90 days, same as cash. There's a lot of different ways you can finance. We just want to make sure that your numbers are on. And that's what MLP deals with. It deals with material labor profit. We figure out your numbers for your business so that you know where your margins are for you to do good financing, long-term financing, being able to benefit the most amount of people with your financing. Next, you're going to be going through the internal financing. So internal deals with, are you a solopreneur? Do you have employees, or Do you have suppliers? And sometimes you can actually have them part of an internal financing contract. We've done it with HVAC companies to where their employees, like their salesman or their installer, becomes part of the contract, and they're also earning interest. Now, can you imagine if an employee is earning interest and monthly payments, residual income off of a job that they did a year ago? Is that an employee that's going to want to leave when you're sharing that profit with them, sharing that benefit with them? No, they're going to stick with you forever because they see themselves as part of the business. So it can be very, very helpful in controlling turnover rate with employees. But you can also do it with suppliers. And if it's just a solopreneur, the benefits of being just a solopreneur and you being able to do the work. We're able to find better numbers and hone those numbers in for your financing. So that's one of the other things that you'll be learning in this process. Then you're going to be learning finance styles. So once we establish your numbers, know what's the best numbers to finance your customers on whatever product or service, then we're going to be able to know which version of financing you're going to do and how you're going to market to your customers. If you don't want to finance, it's okay. One of the things that is involved is what's called account rollover. And with account rollover, that's for individuals who do not want to finance. But you still have to have that part of your contract and part of your system to avoid and eliminate collections. It's one of the things we call pre-collections. It's already in your contract, ready to go in case you hit that unforeseeable event of collections and you don't have to send it off to a collection agency and lose 40%. So we teach you account rollover, full 15 upsell. Next, you're going to go over the term sheet. So we're going to give you the list of terms that follow along with Woje's principles and Woje's system, the software. That's absolutely amazing. It follows your contract. You're going to be learning that as well. The term sheet is going to give you the list of terms that you need in order to be able to finance, be able to do pre-collection, collection prevention, be able to become the merchant provider in a way, and be able to capture all that money and at the same time be a benefit to your customer by lowering how much money is going out of their pocket. So it's really, really cool that way. Next is collection prevention. Like I said, you're going to learn collection prevention techniques. So not just the term sheet, but you're going to learn good ethical principles dealing with how to talk to your customers if any of them get to the point of collections, or I should say, start getting close to the 60 or 90 day collection window. There's ways to avoid that. That's very, very simple, whether you talk to them or not. And it all deals with the term sheet and knowing that system. And we're going to train you on that. In fact, it's kind of interesting because I've had people claim bankruptcy and still been able to get paid. That's a story for another time. But yes, that is possible. And most people don't realize that it's possible. So it's kind of interesting that way. The last thing is of course, Woje 2.0 software. And we're going to be training you on Woje. It is an amazing system. It makes it so that your financing and your pre-collections becomes simple. Anything that happens, it asks you the question, what are you going to do next? And says, here's the things the choices that you have. Which one do you want to do? And those choices are dependent on if you have to talk to the customer or if you don't talk to the customer. So it's absolutely incredible and very, very simple. These are the things that you're going to be going through with your training. We plan on doing it Tuesdays and Thursdays. Tuesdays will be at 3:30 p.m. Thursdays will be at 9 a.m. All the live trainings will be through Zoom webinar. You'll want to look at whether it's below this video or above this video. I'm not sure where they put it, but you'll be able to see a click to the calendar for you to be able to choose which time slot you want to be in. And you're going to want to do Tuesdays and Thursdays because each one can end up being a different lesson. And also any other benefits that we can, or any questions that come out in emails, that sort of thing will be answered during those as well. So we're really excited for you to be involved. We're really excited for teaching you and training you on this and preparing you for Woje 2.0. And Right now, as I'm doing this video, of course, we're in pre-launch mode, which means that there's no subscription. But remember that because you got in right now, you're able to get in at what we call the grandfather stage, which means that the subscriptions that we have, solo, business, or pro, you're able to choose which one you think, which establishes how many contracts you think you're going to be having ongoing at one time. And by choosing those now, before 2.0 is finished, you end up getting grandfathered in at those prices. So as we know that our prices will have to increase over time, you're going to be ones that don't have to worry about that. So it's quite exciting. I'm very excited for you to be able to be a part of the Woje family. And we really hope that you're able to do this properly, do it ethically, do it transparently, and bless and benefit your customer base and your community by following through on the Woje system. Thanks a lot.